If you own a small business and are considering getting a loan from an alternative lending source, such as OnDeck, then my OnDeck review will be useful for you to hear. My review will cover OnDeck's strengths and weaknesses, the loan types they offer, and something about the customer service reviews that people have said over the years when dealing with OnDeck. Before we get going, it's important for you to know that I'm not a licensed credit advisor. This review is my opinion only, based on my experience of researching and working with OnDeck. This presentation is not sponsored by OnDeck. It is sponsored by FinImpact.com. FinImpact.com is a great resource for finding out about alternative lending sources and other tools that small businesses may use. As a small business owner myself, I use FinImpact.com to get ideas about how I can forward my small business goals. A quick look at OnDeck's website shows you that finding your way into a loan is pretty straightforward. They have a streamlined application process that you can fill out. It only takes a couple of minutes. I'll take you through that in this review, but we'll also talk about the rates and payments that OnDeck is likely to offer, and we'll also take a close look at some of the customer reviews, people who have done business with OnDeck, and what they have to say about it. OnDeck's strong points are that they have discounts for repeat customers. So if you get a loan from OnDeck and you pay it off, you might get more favorable terms next time around. If you're someone who would repeatedly use small business loans from an alternative source, a lender like OnDeck and its policies can be useful. They have an easy application process, fast funding, and also a very personal approach. OnDeck specializes by offering two types of loans. First, regular short-term loans, and second, a line of credit. Let's look at the term loans first. OnDeck's term loans have a repayment length of anywhere from 3 to 18 months. The periodic repayment can be done daily, weekly, or monthly, and the APR range is going to go anywhere from about 13% to 45%. The amount you can borrow is anywhere from as small as $5,000 up to $250,000. But I got to tell you, the $250,000 loan amount is going to be for businesses that have a very strong track record and a high degree of revenue every month. OnDeck will probably want to see more than $1 million a year for a loan of that size. Now let's look at the line of credit. OnDeck offers a line of credit with a term length of 3 to 18 months, the same as the short-term loan. Again, the repayment period can be monthly, weekly, or even daily if you like, but the interest rates are a little bit lower, somewhere between 11 and 35%. The minimum amount you can borrow is $6,000 up to $100,000 as the maximum. When you consider how much you can get for the small amount of work and the short turnaround time period, these are actually pretty exciting terms, even though they might sound like high annual interest rate. If you have a business that has the ability to turn capital around and make a profit on it, then this might be a worthwhile product for you. But it's important that you go into this with eyes wide open. You need to be able to balance the opportunity you have with the costs. And it's important that you fully understand the costs before you sign up with a lender like OnDeck. Now, in order to qualify for an OnDeck loan, there are 3 criteria you need to meet. First, you need to have a minimum credit score of 600. Second, you need to have annual revenue over $100,000. Third, you need to have been in business for at least a year. These criteria apply to both term loans and lines of credit. Let's look at some of the screens that you'll see as you go through the loan process. They want to collect information about you as a business owner and a little bit about your business itself. They want to know what kind of financing you need, how much money you're looking to borrow, how you will use the loan. And you should also notice that if you sign up and do this application, you are consenting to receive telemarketing calls and messages, including stuff from an automated telephone dialing system. I wish they wouldn't have that put in there. That's probably a deal breaker for some people. However, keep in mind that telemarketing calls don't necessarily mean just random telemarketers. It can just be their own people trying to close the loan process with you. That being said, based on this language, you have to know that OnDeck will likely share your contact information with other databases. They're also going to ask for your business tax ID, your average bank balance, your estimated gross annual revenue. Pretty standard stuff. Next, they'll ask for your bank statements and give you the opportunity to connect up to your bank account. That's 3 months of business bank statements that they want. And they are going to have you connect directly to your bank so that they can electronically distribute and receive payments from your account. They do note that your personal and financial information are encrypted, and they can never see, store, access, or share any of your login credentials. So let me reiterate. They're going to collect this information so that when you are approved for the loan, they can put that money right into your account. That's the good news. The bad news is now they have everything they need to pull that money out of your account on the schedule that they have specified. Now, it is the schedule you select, daily, weekly, or monthly, so it's not as though there's any surprise to it, but it does mean that you got to be on top of things. You got to make sure that that payment is available in there. Otherwise, you'll incur late fees and that sort of stuff. So just know that's a standard part of the alternative lender game. You got to expect that they're going to give you money quickly, but they're going to make sure they get it back. The pre-qualification application does a soft credit pull. Now, you might not know the difference between a soft or a hard credit pull, so let me give you a quick explanation. A soft credit pull, as explained by thebalance.com, does not affect your credit score. It's actually a mechanism that banks use for pre-qualification. They look over information collected by a third party other than the major rating agencies, and they get an idea of whether or not you're qualified to go ahead and take this loan. Legally, they don't even have to ask permission to do that because, in theory, it's not going to affect your credit score. A hard credit pull is actually going to one of the major reporting agencies. And of course, that will affect your credit score. But it's important to understand that in the pre-qualification, the lender only does a soft credit pull. Now, once you take the loan, that is the equivalent of a hard credit pull as well. Depending on how much of a loan you take and the health of your business, the impact to your credit score will vary. But if you complete the loan and then pay it all the way back, that can actually help improve your credit score a few months later. But just be aware that the process of applying and then taking the loan will have an impact on your credit. So let's talk about who this loan works for. Businesses with good credit, businesses with a strong track record of being able to bring in revenue, use capital and bring more revenue, and anybody that can pay off that loan early because they're able to do a lot with the capital they borrow, and businesses that can afford to do this process multiple times. Repeat customer. If you have a business that falls into that category, there's a good chance that an OnDeck loan could work for you. Just how well does OnDeck do its job? Let's look at some of the customer feedback. The general idea from the customer feedback is that OnDeck has highly attentive customer service, that their application process is fast. It takes just a few minutes to complete, and you can get the funding in as little as 24 to 48 hours. Trustpilot shows that they have over 3,000 reviews from previous customers, 95% of which rate them as excellent or 5 stars. Only 2% rate them as 1 star. That is extremely impressive. Now there is one review in the bad reviews, in the 1-star reviews, that lifted a red flag for me. It says that when they went to pay off their loan early, this customer who left the review, that they got penalized for doing so. I did some research and found that that information was not correct. Not only will OnDeck not penalize you for paying off early, but sometimes will offer an incentive for doing so. So there's a reason why the customer service numbers are so high, because OnDeck is providing a good service. If you want to check out the full review, you should have a look at finimpact.com.